Okay, so just 2 words before you start your webinar. So welcome everyone. Thanks for being here for this fourth webinar organized within the LegalEDHEC webinar series. Further to the precedent ones done by sorry, our colleagues Björn Fasterling, Gian-Claudio Malgeri, myself. The next one will be done by our new colleague Anne Witt, and I think Anne, you are in the participants, so welcome again. Today it's going to be about tax creativity and should data be taxed? Probably you have different answers. You participants, maybe yes, maybe no, maybe why not, or not at all. Anyway, it will be up to my colleague Emmanuelle to launch this discussion with you. So I'm sure you're going to enjoy this webinar, and your time, Emmanuelle.
Thank you very much, Christophe, for that introduction. Welcome, everyone. I'm very happy to be with you today. This is a great experience to be with you to discuss about tax creativity. When we think about taxation, most of the time, we don't think about creativity. And the ambition of that webinar was to mix the two concepts. The question here is, should data be taxed? That's a very important question, and I hope you're listening to me correctly. This is a very important question, very interesting question, and I'm happy to share that with you. I'm going to introduce myself very quickly so that you understand better who am I, and then we're going to move on to the topic. I want to introduce myself because taxation is a concern for many kind of professional. First of all, for accounting, because most of the time it's the accountant which is going to take care of filling the form. Also for lawyers, because tax are levied through law, and also for economists, because at the end of the day, all of this is into a great economic system. Personally, I'm a lawyer, and I think that's important to mention it. And the second thing I want to mention is that I am French. I think it's important to mention it because I know that taxation is something very cultural, and you will be able to find that there's a kind of French culture into my point of view. So thanks very much for being with us, for the good organization of this webinar. I really invite you to use the chat. So I hope you all have access to the chat. It's supposed to be a small link on the right side of your screen. With Amandine, which is helping us for the organization of that webinar, we have organized something which is feel free to ask any question on the chat or to post any comment. The basic rule is that if you indicate on your post no share, if you start with no share, that will be a post which will stay private between you, me, and Amandine. If you don't want that post to be private, then you just post your question, and Amandine will share your question with the community. So feel free whether to post comment, to ask question using the no share use, or for those questions to be shared to the public. So I'm very happy to get back to today's topic, and I would like to share with you the research question, which is, would the society be better off if a tax was created on data? What is interesting here is that we're going to try to move to sorry, I can't have a little problem with my screen. Okay, sorry for that. So we're going to try to go through a journey, okay, with a 360 vision. And I think it's very important that we think about the individual, we also think about the state, and we also think about the businesses. And so anytime I'm going to present you part of my research, I would like to share with you that 360 point of view to find out what the system could be, should be, maybe, or may not be. Okay, that's the point. Okay, so about the question that was asked to you as an invitation to the webinar, there's a question about what are the current trends, okay, in the taxation of the digital economy? Is there a need for such a tax or not? What are the good reasons not to implement such a tax? And we will work on that at the end of the webinar. And what could be the characteristic of that tax? So let's start right now. And I would like to start with you with a survey, and I'm going to ask you that very easy question, which is, do you think data should be taxed? So I'm going to open now a survey, and I would like you to share with me your feeling. It's just about feeling. What is your opinion about that? So I hope the webinar will open the survey now, and I'm going to ask you that very easy question. Do you think data should be taxed? Yes or no? I'm giving you 20 seconds to be able to answer to that so that we can move on, and I will of course share with you the percentage that I received from the system. Thanks very much for your participation. So I'm going to share right now with you the figure, which is that 64% of you consider that data should be taxed, and only 1/3 consider that no, it's not a good idea. That's an introductive survey, and what I would like to do is to invite you to the same type of question at the end of the webinar to find out if your opinion has changed during the webinar or not. Okay, and so what is the program? Okay, what am I going to share with you? Should data be taxed? So we're going to start first. Okay, we're going to start first by the research hypothesis, and I'm going to present you the detail of what I'm working on. Then we're going to look at I'm going to present you what we are not going to talk about, what is not exactly in our topic. Then I would like to dig with you into the genesis of a tax, how a tax is born, how to create a tax. Then we will dig into the details of the tax, okay, who should pay it, how much, when, where, and so on. Another interesting question is the legal nature of the tax, and in this part we will take care of the sovereignty issue, who has the sovereignty to raise taxes in nowadays global world, who has the taxing power, and finally we will end up with the reason for the tax not to be adopted. So let's move on right now with the research hypothesis. So what are my inspirational background? My first inspirational background is the tax on oil. Okay, something like 60 years ago, when oil became key in the industry, for many industries, they have to use that new type of energy. A tax has been created. What is interesting is that at that time, the tax has been created for a budgetary reason, meaning that it was to raise money for the state. Nowadays, everyone considers that it's almost normal that oil is being taxed. So the question that has been raised 60 years ago are not questioned anymore. Another thing which is interesting is that 60 years later on, the purpose of the tax is not exactly the same. It is still budgetary reason, but also it's a green tax. We consider that we want to encourage people to move from using oil to more renewable energy. The consequence is that this tax is quite well accepted, because you know what happened, in France the past year, is quite well accepted because of its green dimension. So what has been created at the beginning for budgetary reason moved to a green tax with another purpose, which is the behavior part of the tax. Another inspirational background is the mining industry, because this is something which is used in the data industry. We talk about data mining, and what is interesting is that when it's about mine exploitation, you have to pay fees for the exploitation right, but you also have to pay fees on the volume that you do extract from the mine. And I think this is something interesting when we think about data mining. It's a little bit like if we were in a world where you have a mine which is the data, and the company come and exploit the mine, exploit the data, attract, collect the data. So here is another inspirational background. And the third one, and probably the most important one, it's the GDPR. And the fact that in Europe, it has been decided that there was a need for the protection of personal data, that personal data is not something with no importance, that it is related to the person, and that a special protection needs to be put in place. What is not in the GDPR, it's the economic impact of privacy. And questions about money are not at stake in the GDPR. Should the extraction of personal data lead to remuneration? Should there be a remuneration on that? Should there be a price? And the economic dimension of the GDPR is not included, in the GDPR. So here are the three background that I'm using to present you my research hypothesis, which is that we have to think about, to work on the idea of the implementation of an EU taxation calculated on the volume of collected personal data that belong to EU residents, and the person which is going to be taxed would be the collecting company. So that would be a tax paid by companies on the volume of personal data that they take out of the EU resident. So that's the research hypothesis that I'm presenting to you today. So when we talk about data, when we talk about big data, it's big figures. And here I'm sharing with you an infographic that I think is interesting, which is per minute, what happened in the world per minute. So it's 2019 figures, but I think it's interesting to see that, for instance, Google, every minute there's something like 4 million research which are done on the Google search engine. Another, I think, interesting figure is that if you look at Skype, okay, there's something like 200,000 Skype conversations which are taking place every single minute. So you can see that data is generated, data is big figures, and it's, if you count down into minutes, it's big figures. Now, if you don't look at minutes, but if you more focus on days, okay, what is the volume of data which is generated every day? I find interesting figures. First, I would like to start with that post of IBM. It was in 2012. And in 2012, they were saying that it's 2.5 quintillion bytes which are generated every day. And what is interesting is that if you go to Google and if you search quantity of data which are generated, they say, they give exactly the same figures, okay, in 2018, okay, which means that it's not really clear, it's not really known how big the volume of data is, but for sure it's massive. And the consequence of that is that if you have a very big taxable basis, okay, you don't need to have a very high tax to generate a lot of public money. But here is a very important question. Why should we create public money? You know that we are in a post-COVID time. I use post because I want to be optimistic. And I think the state are having a big budgetary issue at the moment. But this is not the main point of it. I don't want to focus only on the state budgetary issues. I really want to focus on the society as a whole. Would it be better if this tax was implemented or not, COVID or no COVID? To be really clear, I'm going to give you an easy example. If this tax was to be implemented, what would be the consequence? The consequence is that if I have a Facebook account, okay, I post personal data on the platform. Those data, which are most of them personal data, will generate the tax, okay, wherever they are hosted. just because they are coming from an EU resident. So you can see here that it's really linked to the GDPR and where the resident is, where the data comes from. What would be the consequence if we focus on the company side? The first option is that Facebook can decide to charge me with the tax. They can say, okay, because you're using my service, because you're providing me with personal data, it has an extra cost for me. So now I will charge you for my service in order to face the cost of the tax. Another possibility is that Facebook will keep its freemium business model and say, okay, it is still free for you, but the consequence is that I will have to increase, okay, the price of the advertisement that I'm using or that I'm providing on Facebook. There's a third option, which is not on the slide, but I really want to share with you, which is a risk of exclusion. What Facebook can say to me at one point is to say, sorry, Emmanuelle, but you're not worth it, okay? I don't want to pay a tax for your personal data because I don't manage to make money out of those personal data. So I'm sorry, but you're not an interesting user for me, so please get out. Or stay, but pay. And so another option could be something in between, whether they would charge me for that, okay, or if they don't want to charge me, they can exclude me. And this is one of the main drawbacks of this tax system, is that it will have an impact on the way the freemium business model of the digital are actually working. And the risk of exclusion is something that really has to be taken into consideration. In order to make that example even clearer, and what I'm presenting you here is just ideas to make it clear where what I'm working on. It's not the end solution, okay? It's just to present the idea. If I'm just trying to move to the next slide. Okay, thank you. Example. So if Facebook is collecting, and this is the data that you can find on the web, 500 tetraoctets of new data each day. And if you consider that about 2% is collected from France, for instance, okay, and if the price of the tax is, for instance, but it's just rough figure, 1,000 euro, then Facebook would have to pay 100,000 euro per day to France, okay, which would be something like 3.5 million per year. Would that be a good idea or not? What would be the consequence of this tax? This is what we're going to work on now. Okay, so I would like now to invite you, okay, to post comment, question, feedback. I just presented you the rough idea, and before I go into more detail, I really invite you now to ask your question, to push your ideas. Don't forget, if you want it to be private, you just indicate no share at the beginning. If not, okay, Amandine will share it with the community. Okay, so feel free to post your comment and your question. Okay, so let's move now to what we are not going to talk about. What we are not going to talk about is, first of all, the tax on robots. I know that some people are working on that idea and consider that because social security costs are raised on wages, and because a lot of employment is going to be killed by the robots, there should be a tax on robots. This is something I'm not working on. This is an interesting idea, but this is not the topic of today's seminar. Something we're not going to mention either is the work that the OECD is currently doing about Pillar 1 and Pillar 2. The international tax system is not working very well at the moment, and the OECD is trying to design a new tax rule for it to be more efficient. We're not going to talk about this either. The third thing we're not going to mention is the digital service tax. So for those of you which are not really comfortable with that, it's a proposal that has been made at the EU level, but for complex political and diplomatic reason, it hasn't been put in place, except by France, who decided to launch it. It was last July. The first time the tax has been paid was November 2019. But in January, in front of the pressure of the United States, who has increased the tax on French wine, France has decided to step back, and the digital service tax is not in place anymore in France under the pressure of the United States. So this is something we're not going to mention either, even though there is a lot of very interesting feedback, okay, about the analysis that has been done on this tax. So this is not what we're going to talk about, but we're going to feed ourselves with comments and analysis that has been made on those tax. Okay, so now what are we going to talk about? Okay, I would like to invite you to the genesis of a tax. I'm sure most of you know how we make babies, but now the question is, how do we make a tax? This is a very, very interesting question. So let's have a look at that. The first question is, why do we create a tax? There are three traditional reasons why a tax is created. Those three traditional reasons is, first of all, to fund the state budget, so just to raise money. The second reason is for redistributive purpose. This is what I call the Robin Hood mission of the tax. You take from the rich to give to the poor. Okay, and the third reason, which is very well known, is the behavioral part of the taxation. We want you to do something and we give you a tax incentive, or on the contrary, we don't want you to do something and then we're going to put a tax on that to stop you from doing this. So this is more the behavioral part of the taxation. And this is very traditional justification. Now, what are the other justifications for the creation of a tax? And the first new justification that we can mention is taxation as a cure. When a tax is not efficient anymore, you create a tax to cure the tax which is not efficient anymore. So it's not because you want to have a tax, it's because you're facing that there's something wrong with one tax, that you have a hard time changing and adapting. This is exactly what happened at the moment with the digital service tax, which was considered as being a cure, okay, a temporary measure, an interim tax, in the meantime that the problem of the corporate tax was solved. So that's one of the new reasons a tax can be created. Another reason is to please the electors. And you know, I'm French. We have that specificity in France, which is that share with me your problem and I will find a tax solution to that problem. So I think there's something important here. When people are feeling upset, the creation of a tax on others is always a good manner to please the electors. So this political aspect of taxation shouldn't be set aside. And in particular, there's that great feeling that is that it's not fair that the large digital company don't pay taxes. And if they are doing, why should I pay myself? And then you move to something different, which is the psychology of taxation. What we call in France the acceptance of taxes. You would accept taxes only if others play the game. If they don't play the game, why would you? And I think this is something here which is quite important. Another reason why taxes are created is because we are at the moment when the state sovereignties are at stake. Why that? Because you have big, large digital companies which are global and who have far more power than small, little states, and sometimes even some big states. And creating a tax is a way for the state to say, come on, who's the boss? I'm the boss, I'm the sovereign, I'm the one raising the tax. And you have a kind of battle of sovereignty that's taking place at the moment. And taxing is just a way to express your sovereignty. Finally, creating a tax can also be a manner to try and regulate a non-regulated market. And one important question here is, what about the personal data market? Is it a market which is functioning well or not? Should that market be regulated or not? And is a tax a direct or indirect manner to regulate that market? And I'm giving you the example. I need a service which is to have access to a web browser. And so if I want to make my research, I will have my data that's going to be collected. Okay, and my personal data are going to be collected. What if I don't want? What about offering me the opportunity to say, okay, if you want your data not to be used, not to be processed, then you can tick the box here and you will have to pay for the service. Okay, that could be a manner of regulating the data market without going through a tax. But a tax can also be an indirect manner to regulate the market. So here is something different, but very interesting that also need to be, that we need to have in mind when working on that question. Okay, so in order to understand what's the tax, I invite you to get back to something very interesting, which is Adam Smith. You know, so that great author who is sharing with us the recipe of the tax. And according to him, there are 4 ingredients that you need in the tax. So the first one is that the taxpayer should contribute in proportion to the respective abilities. And so here, the idea is that you may not have the same price or the same tax strategy depending on the type of taxpayer. That's something you should have in mind. Second thing is that taxation should be certain and not arbitrary. We have to know in advance who has to pay, on what ground, how we calculate the tax, and so on. Another thing that Adam Smith is sharing with us is that the tax should be convenient, or should be the less possible inconvenient for the taxpayer in the manner it is organized. And finally, he's sharing very interesting tips on how it should be put in place. Like, what about tax punishment? Okay, what should be the type of tax audit? How tax collection should be organized? And just for instance, the collection cost shouldn't be higher than the money that is expected from the tax itself. Okay, and of course, you have to look at the impact on businesses, how businesses would react, what would be the consequences, and in any way a tax should discourage businesses. So that's something very interesting. Another thing I would like to share with you is Ramsey, 1927, who came with that very famous and great ideas that taxation should be inversely proportionate to the elasticity of demand. The real question here is, what is the demand for personal data? Okay, how important, how big is the demand? Would a tax affect that? Do you think businesses would stop collecting personal data because a tax is created on data? This is a very interesting question that, you know, could be organized, could be the reason for organizing another webinar per se. So let's just focus on that. What I would like also to share with you is Slam Road, 1990. And what is interesting when you read that author is that he explained you that one tax shouldn't be looked at on its own, but a tax belongs to a system. And because it belongs to a system, you have to look at the impact it has on the overall system of taxation. So we are in a world where many taxes exist, and you have to look at the interaction among one of the others. A very interesting article I read about that was from Block and Demange, who have been looking at the impact of a new tax that would be created on platform on VAT. And if companies are making less money because of one tax which is created, the consequence is that we will make less money out of VAT. And so at the end of the day, what you will get from one hand, you will lose it from the other hand. So the tax has no impact, no positive impact, and shouldn't be created. So that's something which is very important to have in mind, to look at the tax in the tax system and not on its own. Another thing that I would like to share with you is Holcomb 1998. What is interesting with Holcomb is that he has been working especially on excise taxes. and excess duties. And he said that what is important is that there are costs which are generated by the tax. First of all, the compliance cost, but because here we are talking about personal data, there's already a kind of habit from the companies to compliance of personal data collection. So this is already something which is in place and which would need to be pushed further, but which is already existing. Another thing interesting is that people will try to substitute and to move to something else. And here I get back to the question, can we move to something else than personal data? Is there a substitute? And finally, in mentioning something interesting, which is the power of lobbying. When you consider that one good is going to be taxed and not another good, okay, you will affect some interest group which will have received a very high incentive in deploying a lobbying activity. And this is very, very true that such a tax would directly impact the digital companies, which are very powerful. And the consequence that Holcomb is coming through is that if you want to organize such a tax, the lobbying activity would be so intense that the chance of that tax to be adopted is really, really small. So that's an interesting finding. So what's the solution Holcomb is sharing with us? He said, first of all, if a new excess duty is created, it should be written in the Constitution. It should be fixed and not changing every annual fiscal year in order to avoid as much as possible lobbying. And what he also mentioned is that there should be only one rate, one price, and no more than that, because otherwise people would lobby to try to benefit from a better rate. The system has to be as simple as possible. Okay, next point. I'm going to finish with Holcomb, and then I'm going to take a few of the questions. I'm going to go very quickly on that part. But what is interesting? Oops, sorry. Okay. One of the thing you mentioned in the article, which is very interesting, is to say a tax is before than anything a political tool, and it's important to look at the economic impact it may have, okay? But at the same time, the politics make the final decision. And so we have to look at economy, but we also have to look at the politic and the diplomatic dimension of taxation. So what is the conclusion of Holcomb? And this is where I want to share with you that according to him, for a tax to be fully efficient, it has to be based on the uniform rate. It should be an earmarked tax. So I don't know if you're all familiar with that concept. Is to say this is a special tax that we create for a certain purpose. And it helps the people to accept the tax. For instance, the tax could be created to develop the digitalization of one territory, for instance, or to promote the education on the digitalization or something like that. And then if you create a tax on data to promote digitalization, it's a kind of win-win justification that could enable the tax to be adopted. It should be, according to him, it should be done at the state level because he is in favor of state competition. It should be written in the tax constitution, and far more than anything, it's unlikely to happen ever because of lobbying. So here is what I wanted to share with you before moving to the next topic, which would be the detail of. Now let's move to the detail of the tax. How should the tax be designed? So when you create a tax, I always say to my students, it's quite easy. You take a taxable basis, you apply a price or a percentage or a fixed price, and then you get the tax to be paid. Okay, so if we are thinking about the tax, what are the questions we have to ask ourselves? First of all, the taxable basis, what do we tax? The taxable event, when do we tax? Third, the price and the rate, the percentage, and finally, who pays the tax? Who is the taxpayer? So let's move to the first question, taxation of data. What should be taxed? The first one is the value of data or the quantity of data. A very interesting comment I receive most of the time from the student is to say data has no value. You can take a lot of data which has no value, but it's the matching of those data which generate information, and it's the matching which is worth something. This is 100% true. You're right. Most of the time, one data on its own has no value. And for that reason, some people consider that it would be more interesting to tax the algorithm, which are the one generating the value, more than the raw material itself. Okay. But what is interesting is that everyone is trying to collect as much as of this raw material as they can. So it really means that the volumes matter, and the quantity here is important. So, so far in my research, I came to the conclusion that taxing the quantity of data might be a better solution than taxing the value of data. And from the company's point of view and from the individual's point of view also, because one of the GDPR principles, for instance, is the principle of data minimization. We should collect less data, and so by taxing the quantity, it will also go in the direction of the GDPR, limiting the quantity of data. It also has some drawbacks, and I will get back to the drawbacks afterwards. Okay, another question is about what type of data. Should the tax be applied only to personal data, or should it be applied to any type of data, like accounting, for instance, like IoT, Internet of Things? Okay, if you take a plane, for instance, a plane is generating a lot of data which are used afterwards for maintenance and things like that. So what type of data do you tax? Because my inspiration comes from the GDPR, I think that the first thing should be to focus on personal data. But here again, this is something I'm still working on, and there are pros and cons that needs to be taken into consideration. Another option would be to tax data ownership. But this is a very interesting point which hasn't been set up so far. Are we the owner of data? Can data be sold? Yes or no? Because when you sell a house, you can put a tax on the sale of a house. Is it the same with data? Because you still have kind of protection afterwards. And so is it really something that you sell, or you don't, or you transfer? And so there are a question here that needs to be fixed before it can generate a tax, and so on. There are many other possibilities, and the question is which one would be the best one. Okay, what about the taxable event? Okay, the first thing I have mentioned is data collection. It's the moment on the extraction that the flow is generated, and this flow could generate taxation. But another option could be that, and because in France we are very creative, we already have a tax on data storage. This tax has been created on the moment when it was so easy to copy and paste music. And so when you buy some storage device, there's a tax on that, which benefit to the song creators. And so we already have such a tax in France. But what about now data centers? Should there be a tax on data centers? I'm not the specialist about that, but I know that someone in the audience is. What is interesting is that the data centers are benefiting from a lot of tax incentive. And why that? Because the territories are very interested into attracting on their ground, okay, what is tangible about the digital activity. And so what we find out is that the trend is not to tax the data centers, the data storage, but on the contrary, to give them tax incentive to attract them on the ground. So here it's very mixed answers. There are pros and cons, and there are the two movements at the same time. Another possibility would be the data activation. So because most of the time your data are copied at several places, one idea could be to say, as soon as it's just sleeping data, they are not used, no tax should be levied. But when, and I come back to the idea of an algorithm, when an algorithm is using those data, then the tax should be created. So as far as I am in my research, I do consider that the simplest option would be data collection. But here again, this is something I'm still working on with a lot of positive and negative impact for all the stakeholders in the different situations. So if you're interested in that topic, I would be more than happy to go on with you later on, because I have some issues about the question. Another question is about the rate, the price. So I put a figure which was, 1,000 euro per tetraoctet in one of my previous slides. It has no meaning at all. What should be the real price of the tax? Should it be a percentage or not? If you take Allcom say there should be one single price, the same one for everyone. Should it be a fixed price? Should it be a progressive or flat tax? That's another question. Should it be something in between? Should it be mixed? That's also possible. That needs to be fixed more by economists, I think, than by lawyers. But here again, that's a very important question. What about the taxpayer now? Should only companies be taxed, or also individuals? Should the states be taxed? Okay, because the state are also producing data, so should there be tax on their own data? Should individuals, so I take picture with my smartphone and I'm generating data myself, personal data, should I have to pay something on those data I'm generating? This is an important question. For the digital service tax, the distinction has been made between large company and small company. So here too, should there be a kind of threshold for the tax to be put in place or not? Experience from the past have proved that it's better not to touch the small companies, because you stop their progression, but a company should have reached maturity before being taxed. But then how do you define maturity? This is another question. Another point is what should you tax? Digital companies or all companies? Here the answer is kind of obvious. There's no reason to make a distinction between digital and non-digital company, because all companies are now having a need for data. So that's kind of obvious. And here we are. So there are plenty of questions which are raised, not that many answers so far. And the purpose is not to make the answer, but more to give, how can I say, an insight, so that each of us can think about this and find out what would be the best option or the worst option, depending on what you think about that. The next chapter is very interesting and is about the legal nature of the tax. Depending on the nature of the tax, the taxing power, the sovereignty would be different. And those questions have been raised by the digital service tax, which is, what is this nature? So to make it very short, in France, we were pretending that it was a sui generis tax, a new tax that has been created from nothing. Because if not, okay, we are facing a legal framework which doesn't make us legitimate in creating such a tax. Whereas the United States, we're saying it's just, it's just custom duties. We are just trying to tax what is getting out of your frontiers. So that was something interesting. So what could be the legal nature of the tax? First of all, it can be custom duties. Okay, but then we have to remember that according to the EU treaty, the power to raise custom duties now belong to the EU and not to the member state. Okay, so if it was to be a custom duty, it would have to be decided by the EU, which, it's more complex from a diplomatic point of view, so should not happen, or not now. But here, there's no idea of frontier. Okay, there's no need for a frontier to be crossed for the tax to be calculated. So I don't think it would be custom duty. It would fit with the definition of custom duty. Another possibility would be excess duties, and indeed, taxes on oil are excess duties. Then we also have to think about what happened at the EU level, because excess duties are regulated by a specific directive. So we have to find out if it fits into it or not. A third possibility would be to say it's a corporate tax, which I don't think it is, because it is not based on profits, whereas corporate tax is calculated on profit. So I don't think that's a corporate tax. If it was, it would have an impact. Sorry, it would have an impact on the double taxation convention that has been signed by the countries among themselves. And the country are kind of stuck. They cannot change their national law because of the network of double taxation convention that exists all around the world. Another possibility, and this is the one France is working on with the digital service tax. Oh, sorry, I missed that part. Another possibility is to say, sorry, that it's a property tax. But here it raised the question that we have mentioned before of the ownership of data. Who owns the data? And here I would like to share with you this article from Mr. Janicek, which is very interesting and enlight that idea that it's really cultural. And if you are in a common law system, or if you're in a civil law system, it's very different. Why is it very different? Because the definition of ownership, the definition of property is different. And so here again, that would not justify the tax to be implemented, because so far it's not considered as being a transfer of ownership. But it can also be a sui generis tax, something really new, and then, okay, it would not fit with the regulation, the international so far. So here is the presentation of the legal nature of the tax. Now I'm moving to the most important and the most interesting part of this, which is why the tax shouldn't be adopted, why it's really a bad idea. So I'm really sorry for this question about the question that I have really hard time reading. It seems that the problem is about to be fixed. So I will try to take 5 minutes at the end to answer your questions. So why the tax shouldn't be adopted? The first reason is so obvious that I think it's important to mention it, because it's tax and no one likes tax. And there's no reason to create a tax if everything is functioning well. Okay, so just because it's a tax, it shouldn't be put in place. That's the first thing. The second thing, which is very interesting, is because data is not petrol. There's something very different between there's a limit resource when we talk about oil. We have a limited quantity of oil, and one of the reasons to create the tax was to say we are exhausting the earth by taking the oil. Whereas with data is the other way around. We are generating more and more data each day. So the quantity of oil is going down, the quantity of data is going up. So it's totally different, and you shouldn't compare it. And for that reason, there's no reason to inspire a tax from another tax, because the products which are to be taxed are completely different. And this is something very interesting, I think. The third reason that I've already mentioned is because data has no value. So why would you tax something which has no value? This is interesting because in France we have that wealth tax, and so we are not afraid of taxing people just because they are rich, even if this is not generating profits, even if it doesn't have a lot of value and so on. So the concept of value, ownership, and so on is something special in that's something that could be discussed also. The impact on innovation. I think this is the most important point. The problem here about innovation, to make it very short, is to say that if we implement in Europe this kind of regulation, what we can expect from the company is that they're going to decrease the number of data they collect. And so the data minimization should actually take place. The problem is that when you take machine learning is becoming very efficient when they have huge data sets to explore. And if the EU companies are invited to reduce the data they collect on that innovation part of machine learning, they may be in a situation where they will not be able to compete with other continents where there is not that data minimization which is on. And at the end of the day, we might reduce innovation by limiting the resources that are needed for data processing efficiency. And this is, I think, one of the major drawbacks, which would be to limit the power of innovation of the companies in Europe. So that's something that needs to be discussed too and to be searched further on. The fifth risk I've already mentioned is the risk of exclusion. Some people might be kicked out of Facebook, okay? And that's the example I gave before. Because the digital services are most of the time based on freemium business model, most of the things are free or given for free in exchange of your personal data. If I cannot access your personal data because of the tax, then I will not give you access to my service. And this is something that shouldn't be underestimated. And finally, we move to something different, which is the power of the digital giant. You know, the idea here is to say that it's more a question of competition law. Okay, is a tax, the way to support the current challenges of organizing competition law among those big digital giants. At the end of the day, they don't pay a lot of taxes, and this is one of the reasons why they are being so innovative. And you can read in many articles that it's a good thing. They are changing the world thanks to their innovation, and we shouldn't tag them because they are. We all benefit from their innovation, and we all benefit from them. And so, for that reason, they are powerful, and we just should let them go. Which is another possibility. So here is what I wanted to present you. So I'm very happy to share with you that I finally received the questions. So I'm going to be able to deal with those questions. While I'm reading those questions, I would like you to invite you to another survey. And this survey is about, do you think data would ever be taxed? So it's not the same question as the one at the beginning, okay? The question at the beginning, sorry, was, do you think data should be taxed? And now we move to, do you think data would ever be taxed? Do you think it's the future, or do you think it's not? Okay, so here again, very easy, yes or no. And I give you 30 seconds to answer while I'm reading your question that I just received. Okay, that's really nice because I received very, very good question, very interesting one. We are almost out of time, but I will try to take some of those questions. So the question of the survey was, do you think that data would ever be taxed? It's interesting to see that 78% of you are answering yes. Okay, 78%, 22% say no. So I think that that's really interesting because most of you considered there's something to be worked on. Okay, my real concern is would the society as a whole would be better off with such a tax? Okay, this is an interesting point because we know that there are still a lot of persons in France and in the rest of the world who do not have access to digital services yet. And I think individuals could benefit from the tax. I think companies may be able to cope with that, but would really have to define how it would be the less painful for them. Okay. And finally, the state, of course, they would benefit from that because it would be more money to them. And so here is the 360 very, very short analysis I wanted to share with you. So about the question I read, one of the question, they are all very interesting, sorry, and I will get back to you to answer those questions. One of the question, which is question 3, in order to tax data, you would first have to settle on the value of data, which will vary depending on user interaction and platform. How would you determine a system to correctly differentiate and price data? The idea here is not to focus on evaluation, but here just to be on volume. Which is not a satisfactory measure, because if you take the volume of a video, for instance, compared to just a like, okay, it's very, very different. So I don't think one single price should be set up, because we would have to differentiate the videos, which are very different from other type of data, and maybe the type of data would have to go through different price strategy. The question number 4 is, in your opinion, how any taxation of data would be combined with a contented taxation of the GAFAM's profit? And here I get back to the idea of one single tax within a tax system. I don't think this taxation of data would replace the corporate tax. I think there will still be a tax on profits. The real question is, would this tax be deductible from the basis on which corporate tax is calculated? I think the work that the OECD is doing on improving the current corporate tax is very important, and it has to be, they have to go on with that. But I think it's something different. So what about the GAFAM? Of course, they are a source of inspiration for thinking about the future. The world is changing, and how should the tax system change with them? And that's for sure. But there's a real question here of combination, and this is what I was mentioning about a tax on its own versus the tax system as a whole. So I don't know if I'm answering exactly to the question, but this is my spontaneous answer. Question number 5 is, could the European Union, rather than the state, impose such a tax given its limited competencies in the area of taxation? You're right. The EU has no tax power, or very little tax power, because the tax sovereignty is still in the hand of the state. And we know perfectly that some states in Europe want to go further, and some states, they really don't want to go further. So here it's important. It really depends on the nature of the tax, because if it's custom duties, okay, custom duties, they are in the hand of the European Union. And here again, this is why we have to understand what is the definition, what is the type of tax which is created, to find out who has the power in the current international taxing power split, okay, to implement it or not. So that's another question. Question number 6, data can have value in a similar manner to IP if the purchaser of that data can use the data to create value. Yes, you're right. This is really the problem we are facing at the moment, which is the value of IP and the value of data. And exactly that's exactly where I am with you, which is to say, we have a question here of all those intangible parts. How do we make value out of that, and how do we share the value, okay, so that it benefits to all of us? So I haven't answered all the questions. I'm sorry about that, but I see that the time is going. I really want to thank you for being with me for this webinar. I'm really sorry for the little technical problem. If you don't mind, I would like to end up by a final survey. And the final survey is just, would you like to go on with the discussion? Okay. Do you think you would be interested in, and would you like to go on discussing with me just one-to-one with others, don't hesitate to answer, and I will be more than happy to go on and exchanging with you by email or by video or anyway. Thank you very much, and looking forward to receive your feedback.